Thanks so much for tuning into Talking Point. I'm your host, Niraj Shah. Tech Mahindra came out with numbers, and maybe you could argue that the quarter four numbers were a bit below the estimates that they set for themselves. But the deal wins are pretty impressive. Their guidance towards revenue growth and margin looks good. Let me quiz Milind Kulkarni on all the key points surrounding the results and the outlook ahead. And Milind, it's been a while. Really good talking to you. Thank you so much for speaking to us.
Thank you, Niraj. My pleasure.
Okay, so Milind, let me start with the difficult points first, and then I'll go to the good points as well. When I looked at all the reports, when I looked at the numbers, the two or three things that stood out for people, and I'm just asking you to address them. So one of the points that stood out for the quarter, that is, or at least people are saying that it kind of didn't work for them, was that organic revenue growth remained largely stagnant on a quarter-on-quarter basis, which was behind what most people believed you would clock in. And the geographies as well from where this growth came in. Rest of the world did really well, but key markets like US did not. What explains this? And is this only a quarter four phenomenon, or how would you address it?
So yes, let me clarify that it would be a quarter four phenomena. Okay. And I see as you know, the order book has been good. Okay. In the quarter one, in the quarter four, which is about $1 billion, and equally distributed between enterprise com and also reasonably equally distributed among the continents. Quarter one going forward, also we are looking at a good quarter book, good TCV again. So heralds good for us. I think what you have seen is a last quarter phenomena should be a one-time phenomena. And okay, the other thing I would clarify is that we had never given a guidance about our revenue. So these were obviously estimates of various people like you. And probably based on the industry trend as well. I understand that.
So, I was just trying to wonder if it was a quarterly thing or could it get repeated. So it's good to know that that is the case. Just wondering, even the employee attrition numbers and the employee count moving off on a quarter-on-quarter for 2 quarters in a row, you think FY21 is the last of those things, or are you saying that it doesn't quite perturb you because execution and delivery would stay unaffected?
So as far as attrition is concerned, yes, there could be a increase in attrition. We have ourselves seen a increase in month of March. Okay, slight increase in month of March. Okay, our recruitment engine is on. Okay, we have recruited in the month of March as well. What the numbers do not show is 6,000 freshers that we have taken in month of February, towards February end, and they are under training, and they will join they will get reflected in employee numbers when they complete the training. And we are also hiring laterals today. So you will see an increase in employee numbers going forward.
Okay. Milind, can I ask you, so there are, not just with you, right? For the industry, I'll come back to Tech Mahindra and the outlook ahead, because I want to talk to you about your TCVs, about your growth. Double-digit revenue growth is pretty strong coming from you. But I just want to understand from you, whole of the COVID impacted 2020. We heard about how every business is turning tech first, and therefore for Indian IT at large, things look amazing. Terms like technolution were used. If that is indeed the scenario, why is it that there is this fairly strong lumpy patch of how do I say it? A disquiet around growth or margins or attrition, etc., is all coming together. Sometimes it's for you, sometimes it's for somebody else, and I'm talking about the top 5, right? I'm not even going to the mid-sized companies. Why is it that happening in a scenario when everything seems to be tech first?
So I think the first 2 quarters of the year gone by have been difficult in the sense it's taken time for even IT industry to adjust. So there was a time where it was quite uncertain. The outlook was uncertain. So no one really was prepared for a increase in demand, which we start seeing from towards fag end of the quarter two.
Okay.
So we and most of us were focusing on operational efficiencies, cutting down the cost, etc., in view of the uncertain scenario.
Sure.
And so all of us were probably, and some of us maybe more than others, were caught unawares. So I think quarter three onwards, we have seen an uptick in number in the demand, and now demand is quite strong. As you can see from anyone, TCV that everyone is announcing.
Okay. Okay. And you think the execution of the same will hold you in good stead in FY22?
That's right. That's right.
Okay.
And for us, what might happen particularly is because we have worked on our execution engine and the cost of operations, that's going to hold us in this.
Okay. Well, let's talk about two or three of these points. The deal wins, right? The total TCV, I presume at a 5-quarter high, and from whatever little I gather, you unequivocally spoken that quarter one could see more of the same. Tell us a bit about what's the nature of these deal wins. And part two of my question is, do you have, as of now, visibility only for quarter one as far as deal inflow goes? Or are you confident that you could kind of repeat this almost recurringly throughout the year? Maybe not at the same pace, but almost recurringly throughout the year.
So the pipeline continues to be strong, Niraj. So, but, it's difficult to estimate or to say precisely that, things will happen in quarter two, quarter three. Okay. But the pipeline is strong, and we hope to continue with strong deal wins, even in the subsequent quarters.
Okay. What's the nature of these wins? I presume enterprise, communication, all of those would have seen some. Telefonica probably played its part too. What's your confidence about quarter one deal wins as well? Is it, as you said, across continents? Is it happening at a good IRR? Tell us a bit about the nature of the deal wins for you.
So, quarter four, we are actually deals even in both almost equally divided. Okay, so which is good for us.
Yeah.
Quarter one, also we are seeing a similar trend. We obviously not announce some of those deals. There's a client, customers, and all those things. But yes, quarter one also, we are fairly confident. Okay. And they are also equally in the enterprise as well as communication sector. So it seems fairly distributed. And as I said, even quarter one also, we are looking at equally more or less equally in the various continents.
Okay. When I look at NA, quarter four, NA, BFSI probably did well for you. Actually, NA did not. Rest of the world did, but BFSI did well for you.
BFSI did well.
Yeah. Would it be, and retail probably didn't. Some of the other verticals didn't. Is that theme likely to continue, or do you think more even spreading out between sectors or themes would happen, or verticals would happen?
So retail was actually, in Q3, the nature of business is such that retail actually picks up. Okay. So Q4 was not really anything which we would be worried about.
Okay.
So today, deal wins we are seeing in almost all sectors. Satisfying thing for us is after, bad quarter one and quarter two for manufacturing sector. Okay. We have seen quarter two, quarter three, and quarter four. We have seen growth resuming in that sector. And manufacturing used to be a number two sector for us. Now, of course, it's position taken by our IFS, BFSI. But manufacturing suffered because of the problems with the auto industry and aero. Auto at least is back on its track. reasonably back on its track, but aero is still not. Aviation will take its own time to come back.
Yeah. Yeah, that I hear from almost everybody. It's just so difficult to pinpoint when will travel and hospitality bounce
Yeah,
back. Just too uncertain.
yeah. We thought we are close to the solution, and we see the wave two.
Yeah, it is looking alarming, but hopefully it'll improve soon. Milind, uh, two questions. So therefore, um, uh, you know, m- the most common commentary that I hear from people who are optimistic about your business is your higher exposure to communications, which everybody believes because of the 5G rollout will hold you in good stead. Now, what is the promise of that even playing out a little bit in FY22? And I'm wondering if it's possible for you to say that, because you are obviously saying that you can only guide for a quarter and not beyond that, which means that even if 5G rollouts are to happen, you probably cannot say that with certainty that FY22 will see some benefits of that in a meaningful way.
Okay, so investment in network is happening today. Okay, though not on a very large scale, but yes, telcos are also preparing themselves for 5G rollout. Okay, so we've seen business because of that. Telcos transforming themselves to be ready for 5G rollout. So a deal like a Telefonica. So that's, I don't see, we will see any major growth 5G rollout in this coming year. But yes, work related to that will certainly be there. So communication, which had not done well first, especially in the first half, has picked up growth in the quarter 3 and quarter 4, and that trend would continue.
One final question, and something that intrigued me, Milind. You are going to give wage hikes, I presume, for quarter 1, which will probably show a dip in the margins. And yet you are, and there is, of course, this problem of attrition that almost all of you have to contend with, or if not all, a lot of you have to contend with. But you in particular, if there's a problem of attrition, if you have to give out wage hikes in quarter 1, and utilization being what it is currently, where it is for you, how is it that you are saying that your margins will stay steady above 15% at least? I would think, wouldn't there be pressure, or do you believe that the second half would just be so superb that it will take care of the pressures in quarter 1 and particularly the first half as well?
Okay, so first let me clarify the increments. The appraisals are over for all our associates. Increments are being rolled out as we speak. Okay, they are effective April. So yes, there would be some impact of that, but we are fairly confident that with the operational improvements that we have done, and the process for which is already is continuing in the quarter 1, we should be able to absorb that impact of the wage increments. Okay, though not fully in quarter 1, but certainly by quarter 2. The other thing is, apart from operational efficiency, we would get growth leverage in the coming year. And, and my CP had already talked of, he was alluding to a 10% growth. And that kind of a growth leverage means the SG&A gets spread over a larger base. And that's going to be a good margin booster for us. So overall, we remain fairly confident in terms of maintaining EBIT margin above 15.
Okay. Well, we wish you all the best for the quarters ahead, particularly quarter 1, but also the year ahead. Thank you so much for speaking to us. Lovely talking to you after a while, and stay safe.
Thank you, Niraj, and you also stay safe.
Thank you so much. And viewers, thanks for tuning in to this edition of The Talking Point.